A new report from Binance Research reveals that the volume of illicit funds on the blockchain has surpassed $75 billion. Despite representing less than 1% of total blockchain transaction volume, these tainted funds have been accumulating since 2016 and are expected to grow by 28% in 2025. This is a significant figure, especially as hacking incidents in the crypto market continue to rise, with stolen funds reaching billions of dollars. Binance analysts explain that these illicit funds are detected during the Know Your Transaction (KYT) phase, but are blocked from being converted to cash during the Know Your Customer (KYC) phase. More than 80% of these funds are spread across multiple wallet addresses to hide their origins. However, the blockchain's transparency allows these assets to be traced step by step. This tracking is a key development in the fight against illicit activity in crypto. Stablecoin issuers can now freeze these funds, and law enforcement has the ability to seize them directly. Binance also highlights the limitations of crypto mixers, tools used to anonymize transactions. Even the largest mixers can handle only about $10 million per day, meaning laundering $1 billion would take over 100 days. This suggests that while illicit actors are trying to obscure the flow of stolen funds, the blockchain's inherent transparency is. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Making it harder to move large sums undetected. The report also notes that the growth of illicit funds is not slowing down. With annual increases since 2016 and a projected 28% rise in 2025, the challenge of tracking and blocking these funds is expected to grow. This raises questions about how platforms and authorities can keep up with the evolving tactics of bad actors. The fact that more than 80% of these funds are distributed across multiple wallets means that traditional tracking methods may not be sufficient. The blockchain's ability to track transactions step by step is a powerful tool, but it also requires sophisticated systems to detect and act on illicit activity in real time. The report also points to the role of stablecoins in this context. Because stablecoins are designed to maintain a stable value, they can be used to move large sums without significant price volatility. This makes them attractive for illicit activity, but also gives issuers the ability to freeze funds when suspicious activity is detected. This is a new development in the crypto space, as it gives entities more control over the movement of funds. Binance's analysis shows that while illicit actors are trying to anonymize transactions, the blockchain's transparency is making it harder to move large sums undetected. The report's findings highlight the growing importance of KYT and KYC procedures in the crypto industry. These processes are becoming essential for identifying and blocking illicit transactions before they can be converted into fiat currency. The report also suggests that the blockchain's record-keeping feature is a double-edged sword. It can both protect and expose illicit activity. As more transactions are recorded and tracked, the chances of detecting and preventing illicit activity increase. However, this also means that bad actors are adapting by using more sophisticated methods to obscure the flow of funds. The next signal to watch is how platforms like Binance and other exchanges implement and refine their. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. KYT and KYC procedures in response to the growing threat of illicit activity. The report's projection of a 28% annual growth in illicit funds suggests that this is a trend that is unlikely to slow down. The ability to track and freeze funds is a significant development, but it remains to be seen how effective it will be in the long term. As the crypto market continues to evolve, so too will the tactics used by those trying to move illicit funds. The next key development will likely involve the expansion of blockchain tracking capabilities and the refinement of procedures to detect and block illicit transactions more efficiently.